We're going to start with a great conversation about the state of the entrepreneurial ecosystem. And then we're going to move in to more conversations about how some entrepreneurs have funded their startups. And then we're going to end with a conversation with a couple different platforms presented by JP Morgan. So we have a pretty jam-packed and action-packed conversation today. Please use the chat for conversations and also for questions, and we'll make sure that our speakers get to them. But first, let's go ahead and introduce our first moderator for our first conversation, Darryl Lindie. He's the co-founder of New Majority Capital, and he'll be talking to Philip Gaskin, VP of Entrepreneurship at the Kauffman Foundation. So, Darryl, let's bring you on stage. How are you? Good morning.
Where are you at? Doing well. Thank you for that intro.
Awesome. Look, I'll hand it over to you, and you can get started with Philip.
Awesome. Appreciate that. Hello, everyone. I have the great pleasure of introducing you to Philip Gaskin. Philip is the Vice President of Entrepreneurship of the Kauffman Foundation, where he's responsible for leading the foundation's comprehensive entrepreneurship portfolio, including grant making, operating programs, convening, research, and policy. Philip is charged with leading a team of associates in providing vision, strategic thinking, and thought leadership to a scale to deepen the impact of the foundation's entrepreneurship strategy. Prior to joining the foundation, Philip was the Chief Operating Officer of Impact Hub, was the Vice President at BCD, a leading global firm. He's a native of Los Angeles with ties to Kansas City and Philadelphia. He's alumnus of Pennsylvania State University and California State University. I want to thank you, Philip, for your support of KINETIC-CON. Without the Kauffman Foundation's financial support, we would not be able to do this for free and reach thousands of people who want to learn about entrepreneurship and funding. We honor your leadership and continued commitment to help us. Welcome, Philip.
Thank you. Welcome, everyone. Good to see you, Darryl.
Awesome.
Good to be back. As they say in the entertainment industry, we are back, and we're back. So good to be here again.
Awesome. Well, let's get started then.
Yeah.
In the past couple of weeks, we've witnessed the failure of SVB and other banks that really serve the entrepreneurial ecosystem. What are your general thoughts on this? And how have your programs been affected, if at all? What does this mean in the short and long term? And how does this reinforce some of your research at the Kauffman Foundation?
Well, good questions. Great place to start. I'd say that what it reinforces, let me say this, what it reinforces is that there need to continue to be creative in various ways to get capital to entrepreneurs and support to entrepreneurs outside of traditional lending and traditional means. And we can go into capital and our capital work a little bit later, if you like. But what I've been proud about is that seeing some of the funds, Founders First Capital out in San Diego, 1863 in Washington, D.C., led by women of color and other funds that are doing these alternative, creative, innovative models like revenue-based financing for entrepreneurs. How strong they've been, I've been proud about their resolve. They've prepared themselves to weather the storms. They diversified who was investing in them and where they placed their money. So seeing that continuity to entrepreneurs has been really good. But when one of the things that we learned back in 2019 when we did a research report, access to capital for entrepreneurs, and one of the barriers was that 83% of entrepreneurs do not access traditional forms of capital at the time of starting a business. That's traditional debt or venture capital. 83% for various different reasons, which range from I don't know about that capital to I get denied about that capital, or to venture capital just doesn't look at my state or geography or whatever. And so that's what it all reminded me of. None of our programs have been affected by it. We are just doubling down on our commitment of what we've been saying since our strategy began, which is about zero barriers to entrepreneurship. What are those systemic barriers that are getting in the way of entrepreneurs starting and growing businesses on a daily basis, especially entrepreneurs of color and other underrepresented populations? And so we're going to keep at it.
That's awesome to hear. And, I guess to maybe let's get into the meat of this conversation, which the theme for this panel is the state of the entrepreneurial ecosystem. And I'm curious how you would describe that current state, and if there are any new challenges that you see entrepreneurs are facing in the state.
Yeah, and I'll say, just closing on my point, one thing I forgot to mention, I mentioned that 2019 Access to Capital report. We did an update in 2021 on a 2023 release on the state of capital for entrepreneurs. Will be released on June 27, I believe. So everyone look out for that. That leads nicely into the state of the entrepreneurial ecosystem. And I think one of the keys is there's a lot of headlines out there. Who's got the highest entrepreneurship rates in what city and what state and all that. One of the things that we're seeing is that companies that are starting small and staying small. And so there's been more people going into entrepreneurship because of choice versus necessity. So coming in 2020, 2021, obviously in COVID, there are a lot of people that were starting businesses out of necessity because they got laid off, their other businesses closed, what have you. A little bit of a shift now into starting it because I want to, out of choice, which is a positive thing. But that's not equally spread. Demographically, that's not equally spread. It's certainly not equally spread over in rural America, and people of color and for women. And so the bottom line is that we just have to continue to support access to capital, access to knowledge, access to support, and access to opportunity for those that have been blocked from opportunity avenues for so long. It's easy to get distracted from that. And there's no way that our economy survives long term unless more people from underrepresented populations are starting firms, growing them, hiring people at a healthy wage, at a sustainable wage, so that people get into financial stability and economic mobility, right? Deviating from that deviates from what the core issues really are, right? I'll stop there and we can keep going.
Yeah, no. So you mentioned you're looking at access to capital, knowledge, and support, and several different other areas. I'm just wondering, what are the key indicators in those different categories that you mentioned that help guide your interpretation on where we're at in those different categories?
Yeah, and I think if you throw out a couple other resources for you here. So what we did in 2019 is we created our policy statement. And we did that by going to DC and listening to both sides of the aisle, House, Senate entrepreneur committees, and getting it from leaders. What do you need and what do you believe in your districts is the problem in entrepreneurship and where people. And so we came up with, it came into 4 pillar areas: access to opportunity. Everyone needs a fair shot. It should not be so hard to start a business. And that some of those indicators, things that I mentioned, it's just like whether it's permits, whether it's whatever it is to start a business, there's so many different things that just people just don't jump in. So unless it's a level playing field, how do you do that? The other was access to funding, capital access. I gave those stats. Access to knowledge. How do I get the skills that I need, the real world learning skills, so that if I want to continue a career after high school into college, I have the right real world learning skills and other accreditations for that. Or if I don't want to do that, or if for some reason college just isn't my thing, I still now can gain knowledge as it relates to what it takes for my own economic independence. And then support is networks, right? So that's just how do ecosystems and entrepreneurial ecosystems and our communities be most connected so that people have the support they need. I always say, what is an effective entrepreneurial ecosystem? One where, and this, a lot of people say this, so it's not just me, where resources flow from those who have it to those who need it in the fastest amount of time with the least amount of friction. What happens in ecosystems if people don't have the support, because who do I talk to? People say I need to talk to all these people. Where do I find them? Where I go? So the ecosystems are more disconnected versus dense. And so we continue to see that those four areas poll very, very well. I'm gonna give you a stat here. As it relates to opportunity, and as it relates to all four of those. And this was, I think, data from 2 years ago, but out of the $69 trillion in our four major asset classes. So that's, real estate, other things. Only 1.3% of that is invested in businesses owned by women or people of color. 1.3% of 69 trillion. I'm forgetting Mr. Spencer's name. I forgot, out of USC. He did that wonderful thing in piece in Forbes last November. Of the $200 billion that was committed during George Floyd for businesses and initiatives of color, only about 1/8 of that's been deployed. Ron Busby, the head of the U.S. Black Chamber, was talking to him about 8 months ago, and he gave me this stat, which I checked, and it looks like it's true. Not that I didn't believe him, it just sounds so unbelievable. Of the 2.6 million Black-owned businesses in the United States, just over 100,000 of 2.6 million businesses have employees. That's not all because, hey, I wanted to open up that one store, or I wanted to do that one thing, or I wanted to do just the one barbershop or the beauty shop or my own tech business, what it is. Part of it is because you didn't have the knowledge of how do you get the knowledge and the support and the tools and the funding in order to grow. We have growth mindset, but that is a startling stat, right? And so those are the type of indicators that go into how we think about, that we will continue to research on and continue to do policy initiatives or advocate for policy. I mentioned America's New Business Plan is that policy paper. So you could search Kauffman, America's New Business Plan. You can download it, read it. We started an advocacy coalition called Start Us Up Now. So you could go to startusupnow.org and you'll see that, plus America's New Business Plan. Because we can't lobby. We're a foundation, we can't lobby, but what we can do is create and support advocacy. And so there's about 200 organizations that have signed on to be advocates for what's in America's New Business Plan, and to use what's in there to go to their local, state, and federal policymakers to advocate for what's needed in their towns and cities.
So Philip, you mentioned opportunities such as like revenue-based financing, and I'm curious, are there other things that you're seeing that are being informed by your research that are opportunities that you would want us to know about at KINETIC-CON or just in general?
Yeah. So we're talking our capital innovation space, as I pivoted from capital access to capital innovation. It's like, what is the more innovative ways and models to get, and especially for philanthropy, to play as an actor in a community to get money to entrepreneurs who deserve them. And so we worked here in Kansas City. We've been, for the last couple of years, we worked with the Chamber of Commerce on a capital access task force. And that was with leading banks, I think over 30 banks in the region, or bank representatives and other businesses, to talk through how do traditional banks start lending to markets to address entrepreneurs that need capital, and get out of the mindset that traditional loans are the only, and large loans, 6 figures, are the only way to do that. Microloans are very, very important. Folks that I just need a little bit. I need to buy that next tractor for my business. I need to, buy that next freezer for the ice cream shop, whatever it might be. And sometimes it is for larger things. But so we educated those banks on how to understand where these entrepreneurs are, how to better understand where low to moderate income tracts are, where these business owners might be located, how to use the language and understand how to connect with these entrepreneurs that traditional banks may believe aren't worthy of repaying a loan and repaying. Because there's all those narratives out there. Well, entrepreneurs are just not, if they need that low amount of money, they haven't picked up themselves by their bootstraps or all that other type of stuff, right? And so what we did, while we were doing that, we also began capitalizing loan funds, or capitalizing CDFI loan pools. So we embarked on a $14 million effort to capitalize 3 local CDFIs, who in turn, and those are community development financial institutions that understand these markets better. So one of them ran a test during COVID. We put in an initial loan, and they catalyzed that up to, I don't know how many more $1 million. They went around the city and catalyzed it to a bigger fund. 170 microloans starting during COVID to save businesses. Not one default yet.
Wow.
That gave us to prove and take to the traditional banks to say, these markets change paradigms, stop the internal narrative about what you believe about entrepreneurs that may be at certain levels or in certain demographics. And so that program is coming along really, really well. Another thing that we started thinking of, what can we do? Can we get the traditional banks to take it a step further? And they came along after a couple of years. They said, but our risk models are just what they are. I can't go to my bank CEO and get this approved. You've got to help. Can you meet us halfway? And said, okay, we'll do that. So Kauffman has created, it's called the Kansas City Credit Enhancement Fund. It is a $9 million, basically a loan guarantee fund that will guarantee loan investments up to 15% if the banks have agreed to create new products and loan into low to moderate income tracts in the 6 major counties in Kansas City Metro. It's easier than an SBA program, because SBA the banks were telling us some rules that sometimes make it harder for them. So we made it very, very easy. That was introduced late last year. We've got about 6 banks so far that have applied. And based on what I'm seeing, multi-million-dollar more investment pools will be available for entrepreneurs. So that's leveraging 9 million. I think we're going to leverage that 3 to 4 times, up to over 40 million, hopefully, just by having a loan guarantee fund. So I'm saying all this to just show how, looking in your community, you could have a community foundation or community CDFIs that are into this, right? I'll stop there.
No, so just to kind of expand on that, the Credit Enhancement Fund.
Yeah.
curious, what are those innovative capital models / solutions / new products that you're seeing the banks roll out, and what have been their initial impact?
Yeah.
If you can share on that.
Well, the banks, the program I just been on the credit is brand new, hasn't started yet. Banks are just applying. So we'll have to wait and see what they'll be doing and what type of models. And they may be more traditional. I think they'll probably go, and there's one, they may go as low as a few $1,000s up to over 100,000. We'll have to wait and see on that. On where we, on some of the CDFIs, they're trialing with what's called revenue-based financing, where if I go back to where we started, that 83% of entrepreneurs don't access traditional investment at the time of startup. Well, there's more of a trust-based lending approach, which is what revenue-based financing is you don't have to pay anything, entrepreneur, until your business starts making revenues. We trust you. We see you. We see your value. We invest in you. Here's when we expect to see revenues back, and you pay as a percent. You pay back as a percentage of your revenues. So what does that do? That avoids the entrepreneur getting turned down because the credit score is too low, not being seen by venture capital, which still most of venture capital still goes. 75% of it goes to 5 or 6 geographic locations in the U.S. And on and on and on. We prove that out, and you can go to, if you search Kauffman Capital Access Lab, there's a website that is an initiative where we trialed this. So back in 2020, we said we were hearing about all these different fund managers out there, funds that were doing this type of creative capital. And so we found a way to put money into a donor advised fund, and that donor advised fund in turn lent about 500,000 into 6 funds in the United States who were testing these new models. Our $3 million has catalyzed. They have raised over $180 million more dollars after we jumped in with our $3 million, invested in over 60, I believe, entrepreneur companies. Majority are from underrepresented populations. Majority are women owned. So these funds that are doing this, so this is Jewel Burks Solomon down in Atlanta. She leads Collab Capital, which is focused on Black tech mostly. Melissa Bradley in Washington, D.C., 1863. That is Founders First Capital. That's Kim Folsom's work in San Diego. Anzu Capital, which is mostly tech. Capacity Capital down in Chattanooga, Tennessee, because we just wanted to test out when you're in a more smaller town, closer to rural, how could something like that work? And so you can feel free to take a look at, you can find the portfolio on that website, Capital Access Lab website. You can actually download one of our research reports, capital research reports as well. So those are the type of things. Some might be doing equity-based, some might be doing employee ownership. There's a number of different things that they're trying on.
Awesome. I want to pivot back to economic trends. And we saw during the pandemic that Black women continued to outpace other groups for starting new businesses. Have you continued to see this trend? Have you saw any new trends that are fascinating that you would want the group to know about as far as entrepreneurship?
I think I'll go back to what I was saying just overall. I think overall what we're still seeing is women across the board, and all those other stats I gave you are still having the toughest time. I've seen different research about that Black women are outpacing other groups and starting new businesses. There's varying research out there, but we will be releasing our Kauffman indicators on entrepreneurship in about 3 to 4 weeks. And we're getting the final research on it now, and it's going to have these type of things more up to date. So stay tuned on that. I have seen varying research, which is why we're going out and doing it, doing a re-up on our own. That was certainly prevalent in the first couple of years of COVID 2020 and 2021.
So I want to talk now about something that's very close to my heart, entrepreneurship through acquisition. Curious if the Kauffman Foundation has ever supported any programs surrounding ETA, and what are your thoughts on this as it relates to your role?
And help me with define entrepreneurship through acquisition. I'm just curious.
Yeah, the process of acquiring an existing small business and growing or scaling that business.
Yeah.
Holding it and exiting.
So this is a business that might be smaller and or struggling. Acquiring that in order to turn it around?
Yeah, it doesn't necessarily have to be a turnaround situation, but it could be established and the owner might be looking for an exit, retiring, or...
Yeah. The way that we've done that is because we can't invest in a for-profit. We have to find ways that are completely legal to get money to entrepreneurs. Mm-hmm. And so we have to then invest in
donor advised funds
or program related investment or those type of things into someone who in turn does the lending. I love the idea of the acquisition programs. What that leads to is, why is that needed? So why is entrepreneurship through acquisition programs needed? We can have a conversation on this. I mean, when I look at that model, I go, what's the driving reason or issue or challenge or barrier that the entrepreneur had why they need to be acquired?
Well, I think I was gonna chime in with a comment. I think it's sometimes just an exit for that owner. I'm in the process of acquiring a small business right now, and the gentleman who I'm acquiring it from is 72 years old, has a son and daughter, both of whom are not in the state anymore, have no interest in taking on the legacy of that business, and so yeah, it's a win-win. I have
what I would say is, once that acquisition is done or that exit is created, how are we setting up the person who exited for longer term success? If there's any transaction and any, financial gain for them once exiting, okay, and do they still need a pathway on how to invest that, how to do that, how to do something else? So everything always has a through line. One of the things is exit, and then when they've exited, how then to maintain whatever talent there was. So that leader who got the exit, how can they give back to community? How can they take that knowledge and serve as an advisor on other firms that need help? And how does that knowledge stay in community that he or she has who exited and not go out? We see this stat where there's an exit. Great, the exit happens, then that excellent talent that was at the firm that got the exit doesn't stay in community, doesn't cycle it back, doesn't become the advisor for the next ones, so that learn, earn, and return. Where's the return part? And that is something, because, and think about it, imagine if they could become operational advisors, marketing advisors, whatever, for these firms that are coming up, for these folks that need it at that really key time. That's would be a wonderful virtuous cycle.
No, it makes a lot of sense. And I want to pivot back now to, we talked a little bit about CDFIs, and I know it was recently announced that your direct capitalization loan fund made its third award to DreamSpring, which is an Albuquerque-based CDFI. Would love you to just talk to us about the impact you've seen so far with DreamSpring and what you hope this third award will continue to do.
Well, the strategy was to award 3 CDFIs for loan funds, 2 local, with knowledge in the different parts of the community, and then 1 that would be more interested in coming in to the community to create more CDFI heft. And that's why DreamSpring was selected, and their amazing suite of technology. And they're doing loans down to as low as $200 for a reason. They're just a brilliant model. Now, that one just started. Pardon me. So I don't have any results there yet. However, on the first 2, one is AltCap, ALTCAP, the longest standing, most popular CDFI here over the years. They have deployed $1 million out of the $5 million so far, 100% to Black entrepreneurs. And then Holy Rosary Credit Union, much smaller. They are a CDFI. They're much smaller than AltCap. They received their amount and have already deployed $2 million since June into entrepreneurs. And so it just shows you, 1, they know the communities, 1, they know the entrepreneurs, 1, they know the models, 1, they know they have that trust built with communities. They understand, they do not in these paradigms that people can't repay and all that type of stuff. So it's working. It's been really, really positive so far. And it's something that I'm going to keep looking at to see, is it something that we continue to do on an evergreen basis or every 2 years or something like that? I don't know, but it is, there's nothing better. As Mr. Ewing Kauffman always used to say, the best social program is a good job. And the way to a good job is getting money and is being able to support through education and entrepreneurship, people owning their own economic demands. And that's one of the quickest ways to do that, is to get capital to them.
So I see a couple more questions coming in here in the chat. And one of them are, what are the types and themes of programs and initiatives that the Kauffman Foundation is looking to fund and support over the next couple of years?
So thank you, Greg. Thanks for that question. So we have our entrepreneur work is really, the priority is entrepreneur-focused economic development. We look at that through the lens of research, and using research to inform policy, our policy work, and then to inform our capital innovation work, our entrepreneur learning work, and our ecosystems work. And so what we're going to be doing is looking at really doubling down on the Kansas City market, where most of our spending is Kansas City based, but really looking at it from a full spectrum of, from the time from pre-K all the way through to adulthood. What are the key inflection points along the way of the human that need to be invested in? How much pre-K is needed? Pre-K is underinvested in from a government perspective in some markets, and we're seeing a little bit. We're hoping to see more in pre-K. A lot of our money does go there, or some of our money does go there. We'd love to see more of it from other institutions besides ourselves and government. The pre-K, is it early learning? And then how do you make, and then going back to skill building and those real world learning initiatives that you can start bringing in high school, or adults, even adult learners can come back and get accreditations in that. And then you're moving over into enterprise, when you get, okay, in order to start a business, what are those entrepreneur learning and accreditations that you need in order to grow and start a business? And then so that you get into career where you're either continuing to be if you want to be an employee or if you want to be that employer, that you have everything that you need to start a business. So if you're starting from pre-K, getting to early learning, we're looking at introducing entrepreneurship earlier in that arc, growth mindset earlier in that arc. What's the language of wealth building earlier in that arc of the child, right? I wish I would have had that. My dad didn't have that. My dad didn't know the word entrepreneur. He didn't know he was an entrepreneur. I didn't know he was an entrepreneur. We didn't have that language. Other, kids said we didn't have that language of wealth building. And so what we're going to be looking at funding and really weighing out what part of that spectrum is where, and coming out with what percentages of the money go where, type of thing. And so it's a big strategic overview that we're doing at a really, really healthy time.
Another question in the chat here. What is the foundation doing to increase the number of emerging fund managers? I know you mentioned that you were able to support 6 emerging fund managers. Just curious, what are you doing to increase them?
Thank you. So what we did after seeing that the success of the Capital Access Lab and that initiative with those 6 funds, we said, okay, what's our next play? So last year we announced our largest commitment ever out of entrepreneurship, $10 million seed investment into Living Cities, third fund, which is called the Capital from a New Majority Fund, which we hope to be a $100 million fund. We hope they're going to raise $100 million on it. And that's to fund more fund managers from underrepresented populations, who in turn are investing in entrepreneurs from those populations. And funds and fund managers who may not be from underrepresented populations, but who are still focusing on underrepresented populations. So that opens up the pool. We don't know how many of those fund managers will actually be funded. That's going to be up to Living Cities. But I'm happy to send information. If you search Kauffman Living Cities, 10 million, you'll find a number of press releases out there on it. And we're hoping what we like to do is do seed investments like that, be first in and help things catalyze and get bigger. And so really hoping that's going to take off and be amazing.
That's awesome. And another question here, what are the types and themes of programs and initiatives that the Kauffman Foundation is looking to fund and support over the next couple of years?
Yeah, that was pretty much in that cradle to career type of layout, what we're looking at right now. We'll continue to do things like our core programs, capital access, capital innovation, as I call it. Keep thinking about how can philanthropy play a key role in getting entrepreneurs funded. The Entrepreneur Learning Kauffman Fast Track, our longest standing program in the foundation. There's 106 affiliates across the United States that are teaching Kauffman Fast Track. That's FASTTRAC. Feel free to go on the Fast Track site and see if there's an affiliate near you. There's also an online version, a way to do a self-paced learning as well. We're going to continue to invest in that. 1 million cups. We're in over 120 cities now with 1 million cups, which is a community convening where entrepreneurs come to be amongst other entrepreneurs and those that support them. It's a connective, collaborative ecosystem. And what happens at a 1 million cups is that an entrepreneur or two present on a weekly basis and present not a pitch session, it's not a Shark Tank or anything like that. It's more of, here's where I am with my business and here's the help that I need. And it's a more organic, community-based, natural and supportive, healthy way of entrepreneurs getting support and immediately getting building relationships and building bonds as opposed to being judged in a Shark Tank way, you're good or bad type of thing. It's not that type of thing. We'll always continue to fund those. We'll continue to look at what are the, once we identify through our strategic work that we're doing, is where is the investment needed the most along that cycle. And that cycle is the areas that we already invested in, pre-K, early ed, high school programs, real world learning, entrepreneur support, things like that.
I wanted to talk a little bit too about recent RFPs that I saw the Kauffman Foundation send out. I'm wondering if you could talk a little bit about the Rebuilding Better RFP and what you were hoping awardees such as the Business Education Fund and Engine Found Inc. accomplish with their award.
Yeah, what we looked at was at the time that the current administration was releasing the Rebuilding Better theme, right? And that's come out through a number of different programs, the EDA and SBA, et cetera, is what are those organizations that are taking a look at best practices of rebuilding in their community? And it was a range of them were awarded, and they're over 2 to 3 years. So we'll begin to start seeing the outcomes and the impact here shortly. But the purpose of it was in order to recycle and inform back into America's new business plan what's working in education, what's working in capital, what's working in support, what's working in knowledge, and be able to feed back into that. I think that if we look at those that were awarded, what we're doing is also encouraging every single one of those to attend to 1 million cups, to make sure if they have a 1 million cups in their city, to go and spread that knowledge and advertise their own firm, their own nonprofit, what they're doing, because all of them fit those 4 pillars of either opportunity, knowledge, funding, or support. So I'm really looking, I'm really looking forward to hearing about more how they're doing, what they're doing, and how they're coming along. Fairly shortly, we're going to start getting some good indicators on that.
That's awesome. Really good question here in the chat, Philip. It's would you say the lack of capital access to businesses of color is strongly correlated to the low number of employees that these businesses have?
Brilliant question. Yes, brilliant question. Yep, you see that. You went right there. So if we look at that 1.3% of 69 trillion number, if we look at the 100,000 plus businesses with employees of that, it has to be. So let's go back to what are the barriers? The barriers are 83% of entrepreneurs can't get funding. My credit score is 7 points too low. Sorry, you're living in the wrong zip codes, right? All the things that happened to my dad over and over and over. Capital is certainly one of them. So one, you're not believed or trusted that you're worthy of capital, or we have a credit system and scoring, which has nothing to do with trust base, which has nothing to do with knowledge base. And so absolutely it does. Absolutely it does. It is not the only thing. Don't get me wrong, it's not the only thing, but it's certainly there. I mean, capital is just that through line because of, I always tell a story. So let's say you're an entrepreneur and you've got a really, really good idea. And there's a entrepreneur class being taught at the university across town or whatever it may be, but you can't go because you're a single mom and you can't find affordable childcare. Right? Barrier number 1. 2, let's say you can find someone to watch your kid. It could be a single dad or a single mom. But the transportation system has changed. And so the train or the bus or whatever that you used to take to get there doesn't run as frequently anymore, and you can't get there in time. Transportation, second barrier. Or Let's say you did. So you started that business. Can't get a loan because of my credit score. I did get that loan, but I can't hire employees because of the wages I need. I can't hire employees because they don't have the knowledge on certain things that I need. Can't hire employees because the cost of healthcare is too expensive. If you look at the stack, capital, transportation, credit systems, all are fundamentally broken all at the same time, on top of everything else we're having to carry in the world these days. That is a lot for the entrepreneurial spirit, the entrepreneurial mind, the allostatic load, and all of those things that we have to experience is just hard. So yeah, capital is certainly one of those factors, but not all of them.
So how do we overcome those other factors? There was a little bit of a follow-up to that question, and I'll just read it out here. It says that one might argue the mentality is the following: if I can't pay workers yet, either through revenue or debt, then I would prefer to stay small. So how does one overcome that type of?
So thank you. That's right. That's why I went into the systemic problem. It is a systemic that all parties and institutions have to look at this holistically. And we have to get out of this us versus them and rural versus urban and all this other polarization that happens and is perpetuated on a daily basis in order to say who plays where and who changes what systems. What we're trying to do through America's New Business Plan is doing that as much as possible, advocating as much as possible. Because I'll tell you, when I do go to DC and I'm on Capitol, I'm not lobbying, we're just meeting with and listening to what we're hearing on both sides of the aisle. And when we start talking about what's in America's New Business Plan, I don't care if I'm in a far right office or a far left, they're nodding their head yes. And so the question is a good one. Is how then do we get to a more functioning place where these type of things can be solved? Because I'm going to stay small. And because the same thing happened to my dad. He opened the second business, but he said, I'm done. I am not going through this again. I'm not going to be told no, they're not worthy again. I'm not doing it. It took him 4 years. 4 years. He used to pick me up from school and we'd go to the bank a lot. And finally, one day after he said, Dad, why are we going to so many banks? He said, I'll tell you when you get older. It turns out he kept going to try to get approved. He kept going to try to plead his case. He kept going to and kept getting it 4 years. And luckily, that's when Broadway Federal Savings in South Central was Black owned and was doing loans. So that's how I answer. That's a great, wonderful observation. And that's why when we started, I said, what are we seeing in the nation? They're starting small and still staying small because of all of these different barriers.
Another really good question in the chat, Philip, here. It says, has the foundation ever calculated or validated the total dollar amount that might be needed to see these disparities and challenges go away in perhaps the next few generations?
I forget the answer to that. Have we validated it? No. Off the top of my head, no. We do a lot of research. I have to go back in the files here in my head and see. But I've seen, who did it? Not McKinsey. Who did that? That 16 trill, something like that? Or is it 16 trillion number of lost economic and lost GDP because of underinvestment in Black communities or Black people or Black entrepreneurs or entrepreneurs of color? But it's billions, if not trillions. Yeah.
So Kauffman's a leader in this space, and I'm curious how you all assess innovative new ideas that entrepreneurs or foundations or different organizations might be pitching you that might help overcome some of these disparities that we mentioned today.
Thank you. What we actually started, 2017. It was called our Market Gaps portfolio. We did 3 RFPs across the nation. Got probably 1,400 applications a year. And what we're asking for is from nonprofits to tell us, what are the barriers that you're working on? And we chose over 3 years, 55. This includes Hadia's HBCU.VC. It's Black Girls Code, Catherine Finney's Digital Undivided, and on and on and on. And that was a national program, which we brought that to be in the 4 states of the heartland, because in Kansas City, because we're really doubling now. But that's really the best way when we do offer and get those large sweeps. And we stay in that innovative way. It keeps us innovative by continuing to landscape and see. You can always go to our website, and there Kauffman.org, and under the how to work with us, and look through all of our different programs, and you can always put in a registration, what's called a registration. And we're always taking ideas that way. They may or may not fit. They may not fit budget. They may fit budget. They may not. They may fit where we're going, may not. But we love having that open access so people can see. We can see what people are thinking, and where we can do the support.
Are there specific areas that you want to double down on that you're not getting as many innovative ideas on that you want to share with us?
We're always going to be doubling down on capital. I mean, we started the Kauffman Fellows program. We helped the Angel Capital Association get started back in the day. And there's always, that's why I'm calling it capital innovation, because I just try what's next. What's always next when it's there. And then what is it that entrepreneurs need at the different stages? Great, you got funding. You may have even gotten funding again, but why are so many businesses still not growing? Is there something else happening that even we don't know about, that it's beyond knowledge, opportunity, funding, and support, or something within that? What are the causal factors? Now, we did a study a couple of years ago, and you can find it on the research area of our website. It was about the entrepreneur leavers, Leavers. Who's leaving entrepreneurship? Who's just getting out? And what we found was that we know people aren't entering. I'm not worthy. I can't get funding, or can't get funding. All the different reasons. One of the things we actually found about was someone's social circles were a determining factor that was either encouraging or deterring them from doing it. So in other words, if your social circles are such to say, and your closest friends are such to say, oh, I don't think you should go out on your own. You just, girl, just get a job, right? Don't try to start a business. We saw that was a factor. So that was just brilliant. That was amazing to see. Yeah, because I thought about my own. Maybe my dad's friends were doing that too. It's those type of things that we're always looking at in the fabric of a community, the fabric of the home, and fabric of the life, of what's really causing certain things. So always curious about those things.
So we talked a little bit earlier about just all of the good, or I guess we've talked throughout this conversation about all the good that the Kauffman Foundation has done. And this question in the chat is asking about how the Kauffman Foundation is getting the word out about their work and the ways they can help the younger generation of entrepreneurs.
Yeah.
This is part of the strategy, talking in places like this.
Well, in every speech and keynote, everything I'm doing, I'm just trying to amplify as much as possible. So we have various means through our Twitter page or LinkedIn page, my personal one. Every week, go to Kauffman.org and please sign up for our weekly Kauffman Currents. I don't know, it comes out, and we're continually pushing out new ideas and amplifying those new ideas through existing grantees or others that we interview. So please do that. That is a great way. Attend to 1 million cups. If there's a one, go to, so it's the number 1 and then millioncups.com. So feel free to go to 1millioncups.com, see if there's one near you, tell people about it. Let's see. Fast Track, same thing. Is there a Fast Track affiliate near you? The community-based one is really great, which is why 1 Million Cups started 10 million years ago in our cafeteria. And now it's all over. It's all over. But it's interesting. The question about the university, when you usually didn't know, I'm trying to think through the lens of how through university, because we work with so many. But and if there's anyone at that university you want me to talk to, I'm happy to. So just let me know.
Awesome. Well, we only have a minute left, and really appreciative of your time. I don't know if there's anything you want to share with the audience before our session is over, but wanted to reserve this last moment for you to just share any parting thoughts you might have.
As I always say, myself looking at what I went through with my dad, Mr. Kauffman, is about unlocking the potential in people. Understand you've got the potential. I understand from an entrepreneurial perspective, it's lonely out there. It can be lonely, very hard. Understand, just have the stick to itness and talk with people, reach out, be in community, talk to your policymakers, force them to, your mayor, your council person, hey, can you do a town hall? Can you get a whole bunch of us entrepreneurs together? There are mayors across the country that are doing that. Everything starts local. We say all economies are local. People are the new economies. We hold keys, and I do see, especially small and midtown mayors are really clicking into that. So do that civic outreach as well, and get them to listen to you.
Well, thank you so much, Philip, for your time today. Really appreciate it.